Problem 8-24, accounting for petty cash transactions. So petty cash is cash that the office is going to have in a locked box that's used for daily small transactions. And I've got some images over here in Excel that relate to this problem. So here's my wonderful artistic rendition of the petty cash box. Michael Martell's in charge of this petty cash box. It's locked. Only he has access to it. And the way this petty cash works, in this case, they have designated to have $400 in the petty cash box. And we know that because the company creates a petty cash fund with an impressed balance of $400. So what this impressed balance means is that at all times, what should be in the box is $400 worth of cash plus receipts. Now these receipts, for example, this red receipt, these rectangles represent receipts for the company. Someone came to Michael and said, we need 20 bucks for postage. So Michael gives him the 20 bucks. He writes out the receipt. He puts the receipt in the box and gives that person the $20. And he's done that for several other receipts too. So at all times, this cash amount, $242, which comes from right here, says on June 30th, prior to replenishment, the fund contains these tickets plus cash of $242. So the receipts plus the cash left in the box should equal the $400. If not, that means we're short some money or we're over. Over just means we have too much money in there, which would be pretty rare. If anything, they're usually short, not over. All right, so the first question is, it says, before replenishment, the petty cash fund should hold cash of how much? Well, first of all, one more thing I forgot to talk about is that when the funds get low, let's say there's only 50 bucks left of cash and a whole bunch of receipts, Michael's going to go get some cash from the bank and put cash back in the box. So it goes from this balance here, $242, up to the $400 balance. So the first question is they're asking is, before replenishment, the petty cash fund should hold cash of how much? Well, this petty cash box should have a total of receipts and cash of $400. The amount of cash it should have in here is going to be $400 minus the total of these receipts. So let's see. I've already gone and added up these receipts. $20 plus 10 plus 35 plus 25 plus 60. So total receipts is 150. So the amount of cash that should be in here is going to be 400 minus 150. And that gives us 250. Now let's get ahead of ourselves a little bit and check how much cash do we have in here. We've got cash, according to this, 242, which came from right here. We've got cash of 242, so I'm going to put that in here. Excel is going to add up the amount for us. So we got total receipts and cash in the box totaling $392. Is that right? No, this should be $400 total. So what this means is we are short some money. How much money are we short? We're short $8. And we will need that information later. And you may be wondering where I got these receipts from. I forgot to tell you about that. These receipts are listed right here. So this $20 is in the red box. This $10 for the office parties in the green box, etc. So these receipts are represented over here visually. So let's get back to the problem. And the problem says, journalize the creation of the fund. So before they even have this fund, they have to create it. So what that means is Michael, who is in charge of this petty cash box, he's got to write a check. He's got to go to the bank, write a check for $400 cash. How do we know that? Because it says it has an impressed balance of $400. So we know the debit and the credit's going to be $400. And he went to the bank and took out $400 cash, so we know the amount going down is cash, and cash, of course, goes down with a credit. So where did he move the funds to? He moved the funds to this petty cash account. So this is a one-time event to open up the petty cash fund. Now, journalize the replenishment of the fund on the end or at the end of June. So at the end of the June, Michael, who's in charge of the petty cash fund, he's going to go get the receipts, and one by one, he's going to journalize them. Because when someone came and got this $20 for the postage, Michael did not run over to the journal and immediately enter that transaction. So at the end of the month, he's going to look at the receipts, and then he's going to journalize it. So let's see what the $20 was for postage. So let's see what they got here. So that's going to be a postage expense. And expenses, of course, increase on the debit side. $20. We've got an office party for $10. Let's see what kind of accounts they have for our office party. That's entertainment expense. And then you got 2 boxes of stationery for $35. Let's see what they got for that. Office supplies. And then we've got printer cartridges, so that's more office supplies. So instead of writing down office supplies again, you're just going to add this $25 for the printer cartridges to this $35, which represented the stationery boxes. So we've got 60. And then we've got business dinner, $60. So that's entertainment. So we're going to add this entertainment, $60 entertainment to the $10 entertainment, gives us 70. Now, what he needs to do, let me go back to my handy-dandy visual. Michael needs to adjust the balance of this petty cash to go from the amount of cash we have now, $242, back up to the $400. So how much cash is he going to need to take out of the cash account and to put into this box to go from $242 to $400? Well, to calculate that, it's just $400 minus $242. That's $158. So if we added $158 to this $242, that gets us back up to the $400 cash balance. So I'm going to skip a line, and you'll see why in just a minute. So that's $158, and we take that out of the cash account, and we're going to come back, or Michael's going to come back and put it in the cash box, and he's going to take out these receipts. Once he has the $158 in there, then you have 158 plus 242 gets us back to the 400. Now, if you look carefully, this transaction does not balance. How much do we have on the right side? Excuse me, the left side. We got 70 plus 60, that's 130, plus 20, you got 150. So these total 150. This is 158. Does this balance? No. So what's the difference? $8. So which side do we put the difference on? We have to put it on the smaller side to make this balance. So what did that $8 represent? Well, remember, Michael's petty cash box had $150 of receipts and cash of $242, which should have equaled $400. So that means he was short $8 cash. So that's the other way we can calculate this $8 cash, shorten over. There's 2 reasons the 8 goes on the left side, because that's what's going to balance the transaction, right? We have 158 on this side, 158 on this side. The other way that you know that the $8 goes on the debit side is because the petty cash box was short. And if they are short, it means they misplaced, or someone stole the money, or they just miscalculated. Anyway, they're $8 short. So that's an expense. So which side do expenses increase on? They increase on the debit side. So when you're using this cash shorten over transaction, anything on the left side means we're short. And if we had too much money in the cash account, we would have the $8 on the right side. So and the third way is short. You can kind of look at the name, short and over. Short is on the left, over is on the right, meaning short. If you're short cash, it's going to go on a debit. If you're over, it's going to go as a credit. So if you're over, if you have too much cash in there, that would be a revenue. And if you have too little, which is the case in this problem, that's an expense. And this was to replenish the petty cash fund. All right. So now on July 1st, make the entry on July 1st to increase the fund balance to 475. Okay, so when Michael originally set this up, he thought $400 was going to be enough. Well, if you find out that that's not enough, you can increase it more. So I'm going to scroll up. We already set the petty cash fund to $400. Notice this transaction down here did not affect the petty cash account. So it's still at 400. But the problem says we want to increase the fund balance to 475. So how do we go from 400 to 475? We're going to add 75 more to the petty cash fund. And since we're increasing it to 475, we need to go to the bank, take some cash out, 75 bucks worth, and put it in the petty cash box. So we now have 475. And that is to increase the petty cash fund. So this transaction here to increase the petty cash fund would be pretty rare. Once the company exists for a while, they get a good handle of how much should be in the petty cash box. So they don't have to do this transaction to adjust it up or down. But on a monthly basis, they are going to take the receipts out, put them in the journal, and then go to the bank and get the cash to replenish the petty cash box back up to its impressed balance of $400 in this case. And that's it.